Good evening, traders. It's Rambo KD here. So I had started looking at the forex market, right? I had started to from scratch, that's from zero, starting from the definition, introduction to forex trading, the definition of terms, meaning of pips, spreads, how to calculate those pips, and which pairs to trade, to major pairs, and to minor pairs. Yesterday I looked at the price and candlestick anatomy. I saw how candlestick opens and how it closes. I came to conclusion that when a candle opens at a high price and closes at a lower price, that means that currency pairs has lost value over that particular time. And when it comes to a case where the candlestick opens below and it closes above, that means that currency has gained value over that short period of time, right? And they came back and realized that we have different kinds of candlesticks. We have the daily candlesticks, 1 hour candlesticks, weekly candlesticks, even up to 1 minute candlestick. I also came to see how those candlesticks can be opened in the lower time frame. For instance, a daily candlestick, there's a way it looks like when you open it in a lower candlestick, like in a lower time frame. I don't want to go back to that, so today I'm trying to look at price delivery algorithm. Alright, I want to see how price moves from one place to another. That is price delivery algorithm. Right, so without wasting time, what is price delivery algorithm? First of all, when we come to the forex market, we are only dealing with price and time, right? We came to know that in order to participate in a forex market, you need to sell something in order for you to buy something, right? And we said we sell or buy those currencies when they are in pair, e.g. Euro USD, right? When you are, in case you have your currency pair like Nigeria, they use Naira. Let's say you have a Naira and you want to travel to Europe. In order for you to operate in a Europe economy, you have to transact your Naira into the European currency, right? That means you have to sell your Naira and buy the Euros. That's what's called Forex, right? You have to, when you're buying one asset, that means you are selling another asset. That's why they're always in pairs. So, price action is always the best way to approach your market, right? It only tells you, or it makes you understand what's happening in the market. So price action basically is very essential on the forex market. I've written everything here. I hope you can see it clearly. It tells the basic understanding, right, of what's happening in the market and who is moving the chart in that particular time, and why is the chart moving and what it means to us as traders. You see, the charts are meant to move in fracture, alright? Every time frame moves in a way, in accordance of achieving a particular goal at that particular time frame, alright? So price action will help us understand how this price moves into achieving that particular goal, right? It will help us understand what's happening in the market when we see candlesticks doing this, and when we see that candlestick doing that. What does that mean to us? What does that interpret to us as traders, right? So that's why I'm making this video, for us to understand every move that is happening in the market, why it moves, and why the market is behaving in that manner, right? We always know price moves from one place to another, but we really don't know why, or the reason why price moves, and that's why price action is very essential in that manner. So we have components of price action, right? We have said price action is just the way the market moves in our charts or on the market, right? So we need to see, or we need to understand why it moves and who is moving them and what does that mean to us as traders. So we have components of sorry, we have components of price action. First, we start from consolidation. These are the main components of price action, right? These are the main components of price movement in the market. This price is moving in a consolidation, expansion, retracement, or the price is reversing. Consolidation, without wasting time, is when price stays within a defined trading range, as you see here. And this is because the big boys are accumulating orders to deliver it in a particular direction when time is right, right? We come to the charts and see that. And then the next thing is expansion. Expansion is when price breaks out. Expansion, you can also call it breakout, right? Stock breakout here, expansion, stock breakout. This is when price breaks out of the consolidation, right? After it has gained enough order to move price. Consolidation, we have seen that it's when price moving in a defined range without making those big moves. It's just moving within a defined range, right? Without moving outside. And when we come to expansion or stock breakout, it's when now price breaks up out of that defined range, right? That's what we call expansion. And when we come to retracement, this occurs when price returns to the most recent price range, right? We have seen consolidation, price does not move outside the trading range, right? It makes small moves inside the trading range within a defined trading range at a particular time. Expansion is now when price has moved within that range and now it breaks up, right, or down. That's what we call expansion. Now retracement, after price has broken above or below, that's when retracement comes in. We'll see price trying now to come back and retest our consolidation, right? Now reversal, without wasting time, it is when price reverses from its current direction to completely a new direction. We'll come to the charts and see every component here, right? We'll see them typically on a chart. But now I'm just trying to lay the foundation for better understanding. So things to note when we are dealing with price derivative that we should not forget. One is there's nothing else in the market other than these four components, right? It's either price is consolidating, it's either price is doing expansion, retracement, or reversal. There's nothing else in the market. So when you understand these four components, it becomes very easy for you to anticipate what the market is doing, right, at that particular time. Up to this level, we have not gotten any strategy, or we are not gotten into a point of analyzing the market, alright, for the aim of entering a trade. Here we are just trying to understand the basics, what happens in the market, what you can see with your naked eyes, right? The next thing you should notice, when you understand who is playing in the market, it becomes easy to understand what's happening in the market and why it's happening. When you understand this is a consolidation, you should know that you should avoid it, because consolidation we have said It's the accumulation of orders from the big boys. The big boys I looked at the first video, they are the big participants of the forex market. The government, the central banks, those large companies, they gather liquidity, and we said the big boys are the most generators of liquidity which is money in the market. So in consolidation, they are accumulating orders for them to move price in a different direction. Don't have to talk much about that. So on a sketch, this is what we mean by consolidation. I hope you can see my cursor. It's when price is moving, right, within a defined range. This is a range, right? This is the range here, right? This is our defined range. Okay, so price does not move above or below our defined range, it just moves in between the defined range. You can see above, below, above, below, above, below, above, below, above, below. It doesn't break above or below, it just moving within that defined range. Now when price, it will happen, okay? When you see a consolidation, what you will follow obviously is expansion, right? So next, when price has moved within that, it will do something like this, right? It will break out of that trading range, right? It will break from out that trading range, and that's what we call expansion. So expansion is this break out of the range, right? Let me try to. This breakout is what we call expansion when price has broken out of the consolidation. Right now, the big boys have accumulated enough orders in here, and they have decided to move price downside. Alright, they have expanded to the downside. Now retracement, as we said, retracement is when price reverses from its current direction, it's when price returns to the most recent price range. Alright, and mostly retracement follows the expansion. Once we have got an expansion, what will follow is the retracement, trying to balance price in that particular time. We come to see what happens here. We have a lot of liquidity void. That's why this comes in. Right now, when price has expanded, we'll see price trying to balance. Right, trying to return to the first trading range or consolidation. Some people call it a retest. You see price trying to come back, right? That's why we'll see price doing something like this. Something like this. Right? That's what we call a retracement. It's when price returns to the most price range. It is the move that follows the expansion move. Okay? These are big things, so we don't read out of thinking to understand them, just basic things, so that's it about those trading ranges. So the next thing we have not talked about is the reversal. Back to our definition. Reversal is when price reverses from its current direction to a complete new direction, right? Price moved in direction, alright? We see price moving to the upward and to the downside, what's a bullish and a bearish. Now in the case of a bullish movement, this is what we mean. This is a bullish, price creating higher highs, right? This one is very easy. Price creating higher highs, price creating higher highs, price creating higher highs, right? Price creating higher highs. That's a bullish market, right? The bulls are in control of that particular market. And now when it comes to a point that, move it to the central part so that it can be seen. Now when it comes to a point at this movement, as we can see, this is a bullish movement, right? This is a bullish movement. All of these, let me mark it. This is a bullish movement, as we can see, guys. That's a bullish movement, right? Now when it comes to a point that price does something like this, this was the last high that was created, right? Price came and went above, created another high. Now when price was coming, we were expecting it to reject from this level here, right? From this demand and create a new high. But instead, price broke below this, our last higher low. Alright, price broke below our last demand area, created a new lower low, right? Now that's when we have had a reversal, right? And then price will come back, retrace, out is a retracement into some internal liquidity and other block, whichever institutional reference point that will be located here. I'll look at them later, and then from there we'll see price now changing its direction from an uptrend to a downtrend. Price will start doing something like this, right? Now we'll see price has changed direction, right? From uptrend to downtrend. That's what we call reversal. It's when price completely changes its current direction to a new direction. That's what we call reversal. So, without talking much, let's try to spot a few of them in the market. Yes, so from here, I'm tempted to call this an accumulation, not from there, but from here. Consolidation, you can also call it accumulation or ranging market. That's when price moves from a different defined range without moving that high. This one here, this gold 1 hour, this is consolidation. I don't know if that's the correct spelling, but let it be like that, right? Consolidation, price moving from a defined range, right? It's not making it that big moves. Now when it came to this level, you can see price broke above, okay? Price broke above the trading range, right? At first, price was compounded into a specific area without making that big moves. Now here, price has broken above, right? Now this is what we call expansion. Expansion, right here. Expansion. Price expansion. Price has expanded, has broken above the consolidating area. Expansion is also called breakout up to this level, up to here, right? Now this is what we call a retracement, though it was not so perfect, but we can call so-called retracement. Retracement is the one that follows expansion. This is a little, very small retracement. This one here. Small retracement to this level, right? So let's try to, don't want to take a lot of time making this video. Let's try to look for reversal. With time we will see these things easily on the market. reversal. Perfect. Dot move inverter. Here it is. Alright. Reversal when we said price changes its direction completely from an uptrend to a downtrend, or from a downtrend to an uptrend. Right. So this is a small uptrend here, as you can see. It's a very small uptrend. Up to this level. Okay. This is an uptrend or a bullish market. This is a bullish market, and now note what happened here. Be careful with what happened here. Price came up to this level, right? This was our last high. This was our demand area, right? It will be very normal of us to mark here and wait price to come here for us to take a buy, alright, expecting to create a new higher high here, alright. But look at what price did, alright. That's very normal, nothing wrong with this trade. If you had marked at this as your demand area, put your orders here expecting price to come and push, create a new high. That's very normal, that's a very nice analysis. But now notice what price did. Price came, it went a little bit high, right? Did not break this last high, right? But instead, price did something. Price retraced up to this, went high, didn't break above here, so that we can call it high. Instead, made a various swing, then did something like this, right? Can you see what happened? Can you see it? Price has changed its direction from an uptrend, came to this level here. It created something which is called a miniature market structure shift, or change of character, and now our uptrend was downtrend, right? Can you say that? And then from here also, price, this was a downtrend, and price also did change of character or market structure shift to the upside. You can see it now, and again from here we changed direction from a downtrend to an uptrend. Can you see that? Can you see that? Come on. Now from this small downtrend, we had another uptrend to continue this uptrend that was started from this level, right? So this was a miniature bearish or downtrend. Right, and now again price turned to bullish. Right, so that's basically it. Alright, price, that's the only thing that price does. It either consolidates, expands, and it reverses. Alright, if price is not in a bullish, it's in a bearish. If not, price is not consolidating, it's moving. Alright, and the way price moves, it moves either an uptrend or a downtrend, just that. Alright, that's the only thing that price does. Alright, so up to this point, I think we are good, because was the introduction part. We'll come to the point at which we will look into more details. For now, we are just doing the basics, the touchy things. Then we'll come to the core aspects up to the level at which we will be entering our trades. Alright, so I'll take time, look at that, try to spot them on your charts, try to look at them on your trading view. When you understand it, we'll come to our next topic, and from here now it's where we will start going deeper and deeper into the main details that will enable us to take our trades. Right, so the next thing we'll be looking at is market structure, simplified for smart money traders. We'll see what's the uptrend, what's the downtrend, what makes a valid break of structure and what makes an invalid break of structure, what makes a valid bullish and what makes an invalid bearish market. Right, now we will come to study this reversal very nicely and see what makes this market structure valid for it to hold the price to the downside, and what makes this market structure invalid, and we'll see price now returning to the upside onto the bullish side after it has taken liquidity below here. So from this topic, market structure, everything will start making sense. So that's it for now. See you next time.